since this is a no fluff presentation, I'm going to really go through this. If you're looking at this here with me and you're a prop trader considering prop trading, get a paper and pen or get your notepad out, because there are a few things probably you've never heard, especially if you're a prop trader, that you may want to write down, whether you take my offer at the end or not. But Dave, if there are any questions, I'll take them at the end, and I'm having a little trouble finding where those are, so I'll just ask you if there's any questions there at the end. But okay, let's get going. I have become a prop trader. I've been doing this for 4 decades, and I have to say that prop trading is probably the most important thing to happen to the day trader, probably since the advent of exchange traded options, or even the micro contracts. But the fact that you can trade other people's money and get 80–90% of the income of the profit that you make is just fantastic. But the issue is that there are certain rules that that dominate the prop trading world that I'm going to approach today, so that you have a much better chance of not only qualifying but getting paid in a consistent way. This presentation is called From Evaluation to Consistent Income. I'm going to take you through those steps, and then at the end I'm going to show you, apply some of those steps to some charts, so that you can see what I'm talking about in real time. So let's get going, and I hope you enjoy it and benefit from it. This is me 10 years ago. This is actually, I was on stage at the Trump Hotel in Miami. Actually, it was my own event that I ran, or way back when. But I've spoken in dozens of domestic and international stages for the last 4 decades. I love to travel. I've got, last time I counted, I've been to 71 different countries. I haven't lectured in all of them, but now, of course, I'm counting each island in the Caribbean. But still, love to travel, love to speak, especially in places like Singapore and so on, where they really respect what's going on in the market and the technicals around that. I've written 4 books and dozens of industry papers. I still write them when I have time and when I'm asked, focusing primarily on building and running responsible trading plans. That's really where I grew up in. I still write trading plans for professional traders as kind of a side thing that I do, because people know me in the business as that. I'm also known for infusing the importance of mental and emotional discipline in my talks and my writings. I just believe that most of the issues that arise in trading are not so much the trading plan. I mean, you have to have a good one, but there are a number of good ones out there that need to fit who you are, and I'm going to talk about that in a second. But the idea of the emotional discipline, and without that fit, your emotions can be all over the place. And so that's really where most go wrong. The Disciplined Trader started in 2000, so we've been around for 25 years now, but the first 15 years, I concentrated specifically on the mental and emotional issues, and in the last 10 years gone back to a combination of the mental and my experience in writing trading plans. And now in the last 3 years, since I've been prop trading exclusively, the trading plans have been adjusted to fit prop trading, because it is a different world and a different set of circumstances. So want to go through that for you. I've just written a book that was just released last month called Their Money, Your Profit, and the cashing in on the prop trading revolution. It's available on Amazon if you want to take a look at that. This is a room of 63 professional traders. It's not exactly the room. This was in the 1980s. I ran this room from 1980 to 1988, started as one of these professional traders, and then graduated a year and a half after being there to managing these people. These are professional traders. This is a facsimile. It's a similar picture. Couldn't find one of the actual room, but this was very, very close. But I wanted to show you the extent of my responsibilities, making sure the professional traders were doing the best for their for their clients. They all were trading individual accounts as commodity trading advisors. And what I noticed with two basic things when I was running this room, was actually responsible for other offices too, but this was my direct responsibility. The simple trading plans work. The more complicated a trading plan is, the less effective it is, because there's room for hesitation, there's room for doubt, and especially when you're exiting, if you're looking for too many things, sometimes it takes too long to exit. So when somebody was not doing their job in a room like in this room, I'd have them in my office, and 9 out of 10 times I'd be taking out the red pen and just crossing out the MACD when they already had RSI. You don't need 2 momentum indicators, so on and so forth. So simple trading plans work. And every trader is different. Every trader is different. And this is why you can take somebody else's trading plan, or you can listen to a presentation out there and buy what works for somebody else, and somehow it's not working for you. It needs to be a fit. You need to match your mental and emotional to the trading plan. So that's all I'll say about this slide, but understand that I've got a wealth of experience when it comes to helping individual traders. Let's get to the main slide here, and then I'm going to go show you some charts. Let me take a drink of water. This is the fast track to trading independence, and it's bent, of course, toward prop trading. The first column here is, I've just labeled it a simple trading plan that fits you phase. You need to find one because you are unique. Again, this is the reason why most traders struggle. They don't have a good match with their trading plan, and they don't understand the depth of the trading plan that they're dealing with. So find and employ a simple, proven trading plan that is built for prop trading. There are some trading plans. I heard Serge talk about long-term income and that kind of a way to look at a chart, and daily charts. You look at them differently if you're a day trader. So, and he's correct, and we all the professional traders know this. But you need a plan that is built for prop trading in order to be the best prop trader you can. Again, those rules of which I'm going to mention a couple of the important ones today. Now, every trader is different. Again, you need to define your strengths and weaknesses. Now, we used to spend a lot of time turning weaknesses into strengths. Let's say you're a trader that has a problem with patience. You've got to be patient and wait for your triggers, wait for your signals. But if you've waited for an hour in your 2-hour trading period that you have to trade and it doesn't happen, you start bending the rules. So you need to have that, and that's not a good thing, of course. You need to have that that control, that patience to wait for the setup. I like to say that having no trades is a decision. You've decided not to do the wrong thing. So there'll be days where you won't have a trade, and that's okay. But every trader is different, and you need to define your strengths and weaknesses. So what we wound up finding out about, again, 15, 20 years ago, is that you're better off identifying your strengths and having your trading plan play into your strengths, and not looking to make a strength out of a weakness, but just to nullify the weakness, neuter the weakness. So now the weakness doesn't, listen, if you're not a patient person, you probably will never be totally patient. You're a person that's a type A, or that's aggressive in nature, so to speak. And so to turn that around is a heavy load. To neutralize it when you're trading is not such a heavy load. So we look to strengthen your strengths and neutralize your weaknesses. You need to, again, match your trading plan to who you are. And the way we do that, the way we amplify your strengths and neuter your weaknesses, this is, probably shouldn't use that word, and nullify your weakness, is that we use what I've invented years ago called nuances. These are small tweaks that you can make to your trading plan that will result in matching who you are. I'll give you a small example. There's a number of things that a trader who has a lack of patience in general, and that's what's hurting them, can do to their trading plan. One of the things that you probably understand, but you may not do, is that the lower time frame that you use, if you're using a 10-minute I'm talking now to day traders, a 10-minute candle chart. Now, if you go to a 5 or a 2, those lower time frames are just going to give you more triggers, so that you won't have to press your weakness, which is lack of patience. You don't want to go down to a 1. I've seen this so many times, and there are very, very few traders that I've seen that can go down to a 1. Now, again, I mentioned that I've written books on trading plans. I've done probably more testing than anybody that's ever done testing in trading plans, and I can tell you that each time you move down a level in your candle size, you're minimizing the effectiveness of your trading plan. For instance, every trading plan is best in the daily chart. The longer, let's say you take the daily chart, it's best in the daily chart. When you move to an hourly chart, it doesn't, let's say you're getting 70% accuracy in your daily chart. When you move to a 60-minute bar chart or candle chart, you may chop off 1 or 2% or 3%, maybe 67. When you get to the 5-minute, you may be down to 65. Maybe the 2-minute, you're down to about 62 or 63. But when you go from that 2 to 1, that can chop off as much as 5 or 6% of your credibility of a trading plan. So I really don't like it to go down there. But what I'm saying there, what I'm saying in this particular box is that if for traders with an issue on your patience, look to move down a trading plan. There's 3 or 4 other things that I can coach you to do that, but this is what I'm talking about. And so we have several nuances. We have actually 9 of them right now that are active, that for different things. If you're an over trader, a revenge trader, that kind of thing. Again, the mental part is important. So you need to have a simple trading plan that fits you. You also have to have positive expectation. You need to have a winning mindset. Okay, you need to understand the why of your trading plan. In other words, you need to do that so that you get through the tough days. I'm going to show you a chart, today's chart. I never cherry pick on these charts. I always show you in these presentations the day of my presentation, and I took a chart, ended about 11 a.m. this morning. I'm going to show you that, and it was a choppy day. I'm going to show you what that means when you know the why of your trading plan. I'm going to show you why we were successful today in trading, even though it was a choppy day, and most traders would have gotten chopped up. I'm going to show you the why, but the why is important because when you come to tough days, if you don't know how the trading signal was developed, then you don't have a trading plan that you can believe in when the going gets tough. Okay, I'm going to show you more about that in a second. You want to model a winner. You want to join a winning trading room. We started a trading room in August, and we have had 4 successful months. I mean, very successful months in a model $150,000 account, and it could be in the 50,000, but all the trades are the same for every model account in prop trading. We didn't have a month less than $5,000 in now. It may not always be like that, but we're starting off strong, and I'd love you to be part of that. It's part of the offer that I'm going to make. But you need to have a winning trading room. Why? Because if you've been struggling or if you've been losing, you've developed a habit of expecting to lose or expecting to struggle. This is not good. It adds to the hesitation. It feeds what you believe is true for you, that you are a struggler or a losing trader that can't seem to make it. You need to reverse that mentality, and in order to do that, we've got subconscious trainings to do that. But something that most traders will do is that if you model a winning trader, somebody like we have who's been a former floor trader, if you model that winning trading, you're going to wind up getting a win, a win, a loss, a win, a win, a win, and you're going to wind up understanding what it's like to be a winning trader. And you will replace the neural net that's controlling you and making you believe that today's going to be a struggle into something that is a winning mindset. It's much more important than you even believe that it is right now. It's very important that you come to the table every day, you come to the charts believing that it's going to be a great day to trade. Okay, so being in a trading room that wins, like the one we have is not only helpful, but I find in some cases critical to turning around the mentality that's already steeped within. And in that trading room, what's interesting is that I don't advise that you stay in it forever, every day. We run it 4 days a week. And what I would like to see you do, and what successful traders, what I want you to point to, and what we've done for many traders, is to wean you off the trading room. Because it's great to follow somebody's trades and take the trades and learn how to win, but it's also important to do it on your own. Okay, so in the beginning, you want to be in there all 4 days for the first couple of weeks. Really start to see that, gosh, this guy is trading the same charts I'm trading, and he's winning all the time. This is great. Then you want to take yourself off for a day, look at that for 3 days, and do it on your own for 1 day. Okay, and see how you do on your own. Okay, if that's working for you, cut out another day. Maybe only go Monday and Wednesday. The other days, go ahead. And you want to get down to 1 or no days in the trading room, and you want to be doing it on your own, because you don't want to. You want to be able to depend on yourself. You've got to learn how to fish, and this is the best way to do it, okay, by having a responsible trading room and weaning yourself off. Let's get into the independence phase, which is really the phase that you're getting at, okay? I hope I'm not moving too fast, and I'm not looking at the chat, so I hope you're digging this, because this is the stuff, this is the depth of the stuff that really works. You've got to look within, and then you've got to perform in the market with that new you, okay? The independence phase. This is, you got to build a stable long-term income. It is not enough to come to the prop trading where there's an evaluation stage and a funded stage, and then there's a third stage where you're getting paid consistently. Right from the beginning, you need to say to yourself, my goal is not to pass and get funded. My goal is not to start to move well in the funded phase. My goal is to develop a stable long-term income. This way, you can really move. You can congratulate yourself along the way, but you must keep the big, what has been eluding you, the big goal in mind all the time. This is what is going to motivate you. Okay, so you need to frame your trading as a business. Not only look at the statistics of the business, but the mindset. Okay, you need to do some journaling. I know a lot of you don't do it, but I've got a 3-minute journaling process that doesn't take any statistics, but honors the statistics that you're not willing to write down. But you need to review, confirm, and move forward. So you need to trade. You need to trade as a business. The late Joe Ross, a good friend of mine, died about 2 years ago. He wrote a book called Trading as a Business. For instance, let's say if you have a business, you put an article, you run an ad on Facebook, and nobody comes, nobody buys, nobody comes. It's a losing ad. But what you've learned from that is you won't run that ad in Facebook the way you've run it again. The way you just did. And the same thing is true in a losing trade. You need to analyze what happened. Now, if you followed your trading plan and you lost, that's a success. That's a win, not a loss. You lost money, but it's a win, because overall, if you keep doing that in a tested, proven trading plan, you're going to do well. But again, we can talk about that more in depth if you happen to join me in with the loaded gun process that I'm going to. Wait till you see it. I think you're going to be really, really surprised. It's a special end of the year winning plan. So the turtle approach, you really want to have a slow, controlled capital growth plan. One of the things that traders tend to do wrong, prop traders, is they're looking at their capital growth, and that's going to happen if you can stay away, if you can stay away from what we call the red line, the bust out line. So your focus should be making trades enough in a way. Your trading plan should honor the fact that you want to stay away from that red line, because the more closer you get to that blowout line, the more you start doing crazy things. So if you stay away from the blowout line, and you do that by responsible money management and risk management, if you do that, believe me, the capital growth will take care of itself. So you want controlled, slow capital growth in the beginning as you're moving toward that final phase of long-term income, because you want to learn that building mentality. It is doable. We're doing it. I'd like to show you how to do that. But the idea is that you want slow, controlled growth. And then when you get out, when your funded $50,000 account is at $60,000 or $65,000, then you can open up a little bit. Okay, so show you how to do that too. A long-term income planning, you want to build your personal money machine. Okay, I think I've mentioned that. So in this particular plan, the most important points are that you need to have a plan that fits you and not one that fits somebody else and gets you frustrated because why are they making money and I'm not. Here, let's go to that fifth plan that I've tried over the last 4 years. I mean, many of the traders that come to us have been 5 and 6 and 7 years and 10 trading plans. The buck, I believe, will stop with us. So I really, and because of these important issues that I'm bringing to you that I very seldom hear traders buy here, sell here, look at what we're doing, here's an indicator. No, that's not where winning happens. Yes, that's where the winning happens from a technical standpoint, but the true winning happens between the ears. And if you can do all of this, if you can find a trading plan that fits you, and you can develop the positive expectation now that you've experienced it with something like a trading room that we have, and then you now set your goal toward that outside goal of long-term income, now you have a trading plan that will take you out of the process that you've been running in that treadmill over and over again. And that's the trading, that's doing the right thing by you, matching the trading plan for you, understanding that you can and will be a winner, and then boom, taking that realization that's now happening to you and now focusing on the independence phase. Okay, now here are the issues that are getting in the way when receiving consistent payouts as a prop trader. The first thing is the open trade equity penalty. Okay, and that is, if you have a $50,000 account, you can't back up from an open trade equity high. Don't want to give you too many terms that I may confuse you, but I think you know what open trade equity is. If you don't take open trade equity, that's going to hurt you, because open trade equity that you don't take brings you closer to the red line. I think you know what I'm talking about. So in the open trade equity penalty, if you have if you start with a $50,000 account and the floor is 47.5, that 5%, okay, they don't want you to come down 5%. Let's say you make your first trade and it's up $1,000, but you don't take it, you want more, and you let it come back to break even. Well, your equity is still at $50,000, but you've given away that $1,000. They're going to count that against you, and instead of 47.5, now that line is at 48.5. So as a professional trader, and you need to now start thinking and doing as a professional trader, professional traders do not let go of substantial open trade equity. And in my example, when you have a $50,000 account and you're up 2%, you don't give that back. You defend that. You defend 70% of it, 80% of it, but you don't give it back. So I would be pulling somebody from that room that you saw and saying, this is not going to fly, because I expect those people to be professional traders. And unless you think and act like a professional, it's not rocket science. It's a matter of marrying your mental stability with doing the right thing with your trading. So you're likely focusing on the wrong thing. So out there, if you're focusing on your equity, don't do that. Focus on keeping that distance from your red line and defending open trade equity. Okay, how to utilize the scalp runner combination. I'm going to show you a couple of charts in a second, and what I'm going to emphasize is the fact that I've never been a scalper, but now I am half scalper, half I call it a runner. Let's call it trend following. But whatever you want, I want more out of one, but I want that scalp. Why do I want the scalp? And why do I use limit orders to take that scalp? Because when you use a limit order and you take a scalp, you're taking a chunk of equity and you're padding that distance from the red line. So if you want to, so you want to utilize a scalp runner combination in order to keep the pressure off that runner. So you take your scalp, and now you put something in the bank. You move to break even on your second position. I always recommend that you would take even 2 contracts in a position. Shouldn't mix my terminologies, but a position is how many contracts you take. I always take at least 2 contracts and use one as a scalp, one as a runner. Once you have the scalp, then move to break even. And now you comfortably run that without the stress. Again, I'm always pointing back to taking that stress off your trading, okay? The third thing is traders are isolated. It's easy to veer. It's easy to take a look at CNBC. There's no accountability. It's hard to focus, okay? When there's so many things going around and it's just not something that you can do totally most of the time for an hour or 2 hours, how long you trade, let alone 5 hours or whatever. It leads to over trading, revenge trading, lack of patience. This is why we like the trading room. People are pairing up in the trading room. They're pairing up, and we have a monthly meeting too. Actually, it's today at 4 o'clock. Every month we meet on one Wednesday at 4 o'clock to about 5 o'clock. We change it, the time, so that everybody fits in around the world. But the idea is that it's a place where we can get together. But when you are isolated as a trader, you want to try to do the things to be accountable, and we help you with that. Struggling and losing becomes a habit. I think I've pounded on that. Winning is a habit too. So positive expectation is essential. You need to learn how to be a winner, okay? And learn how to be a good loser, okay? In fact, there's a book called The Best Loser Wins or something like that in trading, and it's a great book. But the idea is that you can't let losing get you down, because a third of the time you're going to have losing trades, okay, even in the best of cases, and you can't let that stop you from taking the next trade. Okay, I want to show you here and give you my charts and so on the prop trading total package that I want to offer you today, and within that I'm going to give you a few more lessons. The prop trading total package is I'm going to give you the trading plan, I'm going to give you the support, and we're going to have you enter a community for additional support. So here's what it looks like. Here's the plan portion of it. Okay, the loaded gun simple trading plan. You've probably heard about it. It's been around for about almost 5 years now. It's tested and proven. That's why you've heard about it, okay? This is a particular chart. It was from a few months ago. I want to show you a current chart, but I want to show you a couple of things here. First, I want to show you that we use a long-term, it's different for different times, but I use a long-term moving average and a shorter term moving average. Let's call this the 50 and the 20, or it can be the 34, which we often use, which is a Fibonacci number, and say one of the golden mean averages, which is usually the 8 or the 9 exponential moving average. But what I want to show you here is the relationship between a shorter and a longer moving average. When you have a squeeze like this is the time where you need to take a look at squeezes. Are when there's neutrality, when your longer term view and shorter term views averages are coming together, which means there's a sideways thinking in the market. When you see a breakout after that, that is where runs happen, and you can get your scalp on the initial impulse. Okay, here's one. You can see this right here is a squeeze. I call it a squeeze. This is one of our loaded gun signals. You see a better example of that in a second. But and you can see that we always wait for the candle to close. This would be our candle to close, and you can see where you have enough for a scalp and then a run. Okay, and you can see it here several times happening. Squeeze. So I'm waiting for the squeeze. Once you're away from this, once you start deviating from those, moving away from the moving averages, that's when you have snapbacks and sideways movements. Okay, so here's another total squeeze. Okay, now when you're starting any trading plan, especially ours, you do not want to take a short trade unless the short-term moving average is below the longer-term moving average. So nice trade, nice trade. This one just made it here. Another one here. So here you have scalp and a little bit of a runner. You've got a scalp and a runner. Here you just got your scalp. Here you just got your scalp, and the runner never really turned out. So you have, here's one where you actually did get a beautiful, don't be afraid of the long candles, because those are the higher probabilities actually. But look what happened. You got a nice scalp here. I won't talk about how to take your scalp, but there's just too much to talk about. These are easy processes, but I just want you to get the notion of what we do here. And then here's a nice, now once we move away from that, we're looking to protect. You don't want, once this candle is formed and you're this far from both moving averages you really want to look to protect. So here's where we likely would have gotten out right here at this engulfing pattern where you don't want to wait for it to cross back over when you don't have to. Okay, I just want to just show you that we are very cognizant of what high probability is and the way you stay in it. Now I'm going to show you today's, and we have 7 nuances. Again, those are the nuances that can help you to run a chart like this, even though you may have mental and emotional, let's call it incapabilities that we can neutralize and work on your strengths. But these are the kinds of trades. But I want to show you a very choppy day today. This is the 2-minute S&P chart. The other was a 5-minute. Okay, I want to do these averages for these arrows for you, but I want to show you a few. This actually is a loaded gun signal, but I don't want to show you the winners. I want to show you what it's like when markets are choppy like this. Okay, this is actually choppier than it looks in a 2-minute. It's not so choppy, but look what's happened here. We've moved away. Okay, and we're looking for a trade to happen. So we let it come back to the squeeze. Okay, doesn't look like a heck of a squeeze here because we're zooming in on it and it's a 2-minute chart. But here is a loaded gun trigger. Okay, a loaded gun trigger in our world is a hesitation candle followed by an impulse candle that crosses the short-term moving average. This is what, and you can see it looks like a revolver. We have several triggers. This is one that now it's got to be in the right place. Don't go taking this and but this is one of the right places. You got to squeeze. It's crossed. You take it at the open of the next candle. You always let it close. Okay, you always let the signal candle close. Once it closes, we are in the first trade short here. Now, where do you take your scalp? All I'll say is that it's in relation to the length, the size of the trigger. We would have taken it right around here. And then when the market moved lower like this with our remaining position, remember we moved to break even on your second position or your second group position, second contracts. If you're trading 4 S&Ps, this is the S&P micro contract. If you're trading 4, you're taking out 2 at the scalp and you're leaving 2 as the runners. Now you have a bottom here. You don't want to challenge that bottom if you don't have to. So you're always looking at what's going to happen. Well, when you start going up here and then you have the next candle green, you'd be out here, okay? And you're out here because you understand that supports and resistances hold. I'm not going to give you the basics right here, but the idea is that you have a trigger, you take your scalp, and then you let this run for the right reason. You don't want, and because here's the open trade equity, you don't want to give that back, okay? You don't want to wait till it crosses back over or another cross of the signal. No, you don't want to, of the moving averages, you don't want to do that. You want to preserve open trade equity. I can show you how to do that. Here's another, now we have the short-term moving average above the long-term moving average, and here you have another revolver per moving north. Now, I didn't draw this line until later, until I was looking at this right here and what to do here. So this line wasn't here, but you have your scalp in here, and then you have some hesitations here. You would have been out here with the open trade equity. So the idea is that again, you're preserving. So what was the wind up here? You had a nice scalp here. You padded your distance from the red line. You have, if you waited to break even, okay. A lot of our traders will do that. I don't like to do that. I like to say you've got 3 tops here that have happened, and you've still got a long, probably being influenced by this to some degree. You may be out here. So I'm saving that open trade equity, but not if you're not. That's okay too. Again, I'm not going to take away who you are as a trader, but I do want to teach you some of the things you could be doing that you may not. Here's another one. So again, a squeeze, okay, a loaded gun signal. And now I drew this line because now I have a reason to believe this is actually another one, but I didn't take this. Why didn't I take it? It's not a close enough squeeze, and the possible distance to this resistance was not enough to comfortably take a scalp. This one was, okay, with the same line being drawn. Now we took it very easily here, okay? So I wanted to show you what a choppy day looks like and how we've had a series of winners today because we honor the process of prop trading, employing the scalp and letting them run. And listen, in this one, you would have had a nice run. You would have had your scalp here, and then you would have had a nice run. I want to emphasize that. Listen, we would have been on this. The idea here is that what happens during the tough times. Okay, can you survive the tough times? And I think I've shown you enough that the plan can do that. Okay, let me give you an idea of the support. Again, this was another chart that shows you an older chart that I had put up. Here's another thing that we like to see that got a scalp. Here's another one that had a run. Okay, so this was the 5-minute Jap. Actually, this was today. I put this in today because I wanted to show you that here's a Japanese yen candle with a loaded gun signal. And look at, you not only got your scalp right before this previous high, but you got a nice runner here. Okay, so it works in any market, any time frame. Here's the support I want to give you: 90 days of unlimited one-on-one coaching. Okay, I want to make sure that you understand the simple trading. Listen, it's simple. I think I've done a lot of talking, and I've done some speed talking. It's the nature of a 40-minute presentation, but I wanted to make sure that you understand that it's a simple trading plan. It's a live trading room, positive expectation, run by Dan D. Maria, a former trading floor trader and CBOT. Runs it with his son Matt. Today, Matt's running the room. Again, I want to eliminate your primary mental and emotional issue. I want to give you a private session with my wife, who is a world-renowned mental trainer, and she will spend an hour with you, helping you to neutralize that issue that may be stopping you. I want to give you that also. So here's the kind of support that we give you: a live trading room, 90 days of one-on-one coaching. You won't need more than any 1 or 2. You can have as many sessions as you want. Most traders just take 1 or 2 sessions. You'll look at the quick videos. They're only an hour and a half, and you'll understand what the trading plan is. But I want to understand who you are and issue those nuances to you, suggest them to you. Okay, the community that we have is the school community. We have a new school community that you can ask your questions. We post comments and supply. It's a place you can go to anytime and ask us questions. I'm there. Dan and Matt from the trading room are there. Tisha is there. Everyone in the community, we share tips and ideas. You can partner up with other traders that are on the same trading plan if you want some accountability. We ask questions, get answers. We find trading buddies for accountability, as I mentioned, and you learn from winners, traders who are actually collecting payouts. What are they doing? How are they doing it? We can talk all about that in the trading room, and we can talk about that in the community. Okay, here's Jeffrey Sasser, who's he's felt burned out. He's used the loaded gun trading system. He calls it easy and simple and understand to use. I talk a lot about edges. I'm up over $10,000 in 7 days in the PA account, thanks to Loaded Gun. Loaded Gun is simple to understand. It's a simple trading plan. I've shown you some of it, but without really telling you the real keys to it. But I've given you some of the real easy way that we trade, so that you don't have to look at a million things. You saw a RSI. We use that for position sizing, not for getting in and out of trades. Okay, here's Dan, a former floor trader, independent trader. He was the mayor of Morton Grove for 12 years. They've even named a street after him. And you'll love Dan and his son. Here are some testimonials that are just great. Listen, I can put all of the winners in front of you, but it's hard to believe unless it's happening for you. So I want you to make this happen for you. Okay, Loaded Gun Simple Trading Plan. Wanted to send you a quick email, but I wanted to show you this one. Came in last Friday. I have received multiple payouts and recently got kicked into the live and top one trading. It's a firm that does prop trading. They've helped me get there. And this is Julie, who was a good trader before, but with our help, she was able to really accelerate. So here is my offer to you. I know we only got a few seconds here. Here is the prop trading total package. You've seen how simple a chart looks like. Okay, we're going to give you the Loaded Gun Simple Trading Plan. It fits on one sheet of paper. It's only about an hour and a half of videos. It explains everything, including all the sample charts. It's a very easy trading plan to understand once I give you all the tools. There are 7 nuances currently. I want you to understand what they are and apply them to you if you have these maladies. Okay, it's very, very important that you do that for anything. I want to give you 90 days of one-on-one private coaching with me. If you're a newbie, you may take 2 or 3 or 4 sessions with me. I don't think so. Very few take more than 2 or 3 sessions. Most take 1 or 2 that we can meet. And sometimes I demand the second position. If I saw that you didn't understand something completely, I say, let's meet again in a week. I want to make sure that it's going well for you. So I want to make sure that you got it down. Even though it's simple, I just want that assurance, okay? So group get together once a month. We're actually holding it today at 4 o'clock. You can actually slip in if you get in today. But group get together once a month where we all ask questions. We all have our little boxes and so on. It's kind of fun, but usually it winds up many times the second half me giving a lecture on certain things that I've discovered. I'm going to give you 2 weeks in our trading room. After that, it's $99 a month. It's not a lot of money. Okay, but I want you to experience it for 2 weeks and see what winning is like. Okay, some people don't like trading plans. I didn't want to make it a part of the package, except for give you the 2 weeks free in the room so that you understand what winning is all about if you happen to be struggling. And the one-on-one issue solving session with Tisha, again, you'll spend an hour with, well, 50 minutes with her, and she will ask you the kind of questions that are going to be uncomfortable for you to answer, and you'll get out the real problem, and Tisha will have you leave with either a meditation or something we call an EFT session that will allow you to work with that and offset that issue. Or she may be helping you strengthen a strength that you already have. It's up to her. I want you to have that session. We charge $500 for that session for professional traders, $250 for our people. I'm going to give you that session. And I'm going to give you admission, of course, to our trading hub. Okay, I want to give you our ironclad guarantee. You won't hear this from many people, but I am so confident that you're following the Loaded Gun Simple Trading Plan. It's going to result in you getting funded by your prop firm so that you can risk their money and not yours and still receive 90% of the profit that you generate. Just show me that you followed the rules, that your trading experience, show me just a week, 2 weeks of trading, and that it didn't work for you. And if it didn't, I will refund your purchase price plus $500. I've never had to do it. The trading plan works. You've got to follow it though, okay? And currently offered, it's $24.97. You'll see it on our site. But I want you to have all of what I'm talking about here for one investment of $797. It's only for the first 5 people, and I have to limit it. Some people say it's true, and some, if you're one of the last 5, you'll get a waiting list thing, and I'll try to get you in before the end of the year. But I want the first 5 that get in now, and I have to do it because of this piece right here. My calendar gets filled, and I just had another full presentation a week ago. So I don't want you to wait 2 weeks to see me. I want you to, if you want to see me this week, you may be able to see me, for instance, on Thursday. So I want to keep that open. Here's where you need to go. There's no coupon code. I've changed the price just for this presentation and the presentation I made last week. But their money, yourprofit.com, it's all you have to go to. You'll see this price right out there for you. Really want to have you with me if this all sounded like the solution for you. Somebody who cares about you as an individual, wants you to match yourself with your trading plan, with your new Loaded Gun trading plan.